Okay, you guys, we'll now start with chapter 4. If you'll remember, we learned to do step 1 in the accounting cycle. In chapter 2, transactions are analyzed and recorded in the journal. Then those transactions are posted to the ledger. We also completed that step in chapter 2. And those steps would be repeated throughout the year. Then when we're ready to prepare financial statements at the end of the year, or maybe more often than that, depending on the business and the owner's preference, at the end of the year we would prepare an unadjusted trial balance from our ledger totals. Okay, and those are just the totals of each account the business is using in that ledger. Okay, then we covered steps 4. Adjustment data are assembled and analyzed. It can take a little while to get that information together. Then adjusting entries are journalized and posted to the ledger. Remember, those adjusting entries are made to bring the account balances on the unadjusted trial balance up to date so that they're correct in the ledger for use on the financial statements. Now, in completing the remaining steps in the accounting cycle, we're going to go back and pick up this optional worksheet step. Now, it's not a required step in the accounting cycle, but it can make steps 6 through 10 easier. And in this big problem in chapter 4, it combines the adjusting entries we learned to do in chapter 3 with the remaining steps in the accounting cycle. So we'll start with this worksheet, then we'll make adjusting entries and post those to the ledger. We made adjusting entries and learned about those in chapter 3. Well, we're now going to post them to the ledger. Once those adjusting entries have been posted to the ledger, then the account balances in the ledger should be correct for use on the financial statements. So we'll take those balances and do another trial balance. This one is called the adjusted trial balance. Then those numbers are correct for the financial statements. We'll prepare financial statements again, just like we did back in chapter 1 when we introduced them. Then closing entries are journalized and posted to the ledger. We'll talk more about those when we get to that step in the problem. Basically what they do is prepare revenue, expense, dividend, and dividend accounts for use in the new year by zeroing their balances out. Revenue, expense, and dividend accounts only report amounts for the current year only. So to do that, they have to begin each year with a zero balance. And we transfer their balances into an account that does carry forward year to year retained earnings. So we'll talk more about that when we get to it. Then one final trial balance is prepared. It's called the post-closing trial balance. Okay, so we're going to start with this 5th step, the optional worksheet, and we're working problem 4-4A, and that is on pages 200 and 201 in your book. Okay, so let's read instruction 1. For each account listed in the trial balance, enter the balance in the appropriate balance column of a 4-column account and place a check mark in the posting reference column. Okay, so we're going to enter our unadjusted trial balance that you see on page 200. We're going to enter that into our ledger accounts. So we'll start. Let's go down to our general ledger. We'll start with cash. Its balance is $12,000. Notice they've entered these for us in this template. But let's go through and check them all. That one matches. Supplies should have a debit balance of $30,000. And it does. Okay, next. Prepaid insurance should have a debit balance of $3,600. And it does. Beginning balance. It's good to check these in the beginning, you guys. There could be an error with the template. Let's make sure we're all starting from the correct spot. Equipment, debit balance of $110,000. Accumulated depreciation, a credit balance for $25,000. Trucks, a debit balance for $60,000. Accumulated depreciation, a credit balance for $15,000. Accounts payable, a credit balance for $4,000. Capital stock. Wages payable did not have a balance yet. Capital stock, a credit balance for $26,000. Dividends, a debit balance for $15,000. Service revenue. They're using service revenue rather than fees earned in this chapter. And a different business could call it by different names, but it would be up to the owner. Service revenue should have a credit balance of $160,000. It does. Wages expense $45,000 on the debit side. Rent expense, supplies expense does not yet have a balance. Rent expense, debit balance for $10,600. And I'm just checking these from that unadjusted trial balance on bottom of page 200. Truck expense, a debit balance for $9,000. And miscellaneous expense, sorry for that, you guys. My email popped up. I apologize. All right, rent expense had a debit balance for $10,600. Truck expense, a debit balance for $9,000. And miscellaneous expense has, let's see, our depreciation expense accounts are zero so far, so is insurance expense. And then miscellaneous expense has a debit balance for $4,800. Now the ones you saw with zero balances, we'll use those accounts in this problem, but they just don't have a balance yet. If you notice, all of those are listed in instruction 3. Wages payable, account 22. Supplies expense, account 52. Depreciation expense on equipment, account number 55. And depreciation expense on trucks, account number 56. And insurance expense, account number 57. Okay? That might have been a bit of overkill, but it's good to check to make sure there's not an error in the template, that our unadjusted trial balance numbers match the beginning balances in the ledger. Now, if we were doing this on paper, they would have had you fill those in. But since we're doing it on the Excel template, they prepared that step for you. Again, sorry about that email popping up. I've got all that closed out now. Okay, so we'll start back with instruction 2. Enter the unadjusted trial. Enter the unadjusted trial balance on the end of a period spreadsheet or worksheet. Now this is an optional step, but we're going to complete it because it should help with the remaining steps in the accounting cycle. And complete the worksheet. Add the accounts listed in instruction 3 as needed. Okay, now I believe they're going to have your beginning balances entered here as well, and they do. Notice this unadjusted trial balance, which is what it's called here as well. This unadjusted trial balance is exactly like the one you see on bottom of page 200, except the new accounts that we're going to need, like wages payable, have already been entered. Okay. So steps 1 and 2 were or step 1 and the beginning of step 2 were kind of completed for you. Okay, to complete the worksheet, the first step will be to complete the adjustment columns. And those adjustments are like we learned to make in Chapter 3. We have a few of them to make here. And our adjusting information is listed on bottom of page 200. Let's start with A. Now if we have a debit adjustment entry, we'll put it in this column. A credit adjustment entry will be entered here, of course. Then we should be able to total the two columns and they'll equal out. Okay, on A, supplies on hand at March 31st are 7,500. Okay, that tells us the amount of supplies left at the end of the year from our inventory count of supplies. If you look at the supplies balance on the unadjusted trial balance, it's 30,000, and we have 7,500 left. Well, the difference in those two numbers would represent supplies used during the year. Supplies used during the year should be debited to supplies expense. It's an expense account that increased, and it's going to increase on the debit side. by the dollar value of supplies used that year. So we're going to enter 30,000 minus the 7,500 left on hand. Gives us 2,250, and that's a debit to supplies expense. Okay, so let's put it in here. Supplies expense will be debited for the balance here, 30,000, minus the 7,500 left in inventory at the end of the year. That equals 22,500. That's our increase to supplies expense. Remember, it's an expense account, and they increase on the debit side. Now that's also going to be a credit to the supplies account. 30,000 minus 7,500. That decreases the asset account balance supplies by the dollar value of supplies used during the year. Remember, we made these entries back in Chapter 3. We're just going to carry them forward through the end of the accounting cycle here in Chapter 4. Okay, on B, insurance premiums expired during the year are $1,800. Remember, if you're given the amount of expired premiums, that amount is the amount for the debit to insurance expense. We want to increase insurance expense by the dollar value of premiums that were used during the year, or premiums that expired. Insurance premiums that are paid ahead of time, as time passes off, their cost becomes insurance expense. It's no longer an asset. So we're going to debit insurance expense for $1,800. The dollar value of the premiums expired during the year. And we're going to credit prepaid insurance to reduce its balance for the amount of premiums expired during the year. That way our balance in prepaid insurance after adjustment will only be left with unexpired insurance premiums, or premiums that have not yet been used. Okay, we'll pick back up with the C adjustment and finish those out and continue with the problem in the next video. Thanks.